Well, good morning, everyone. Welcome to our Wednesday morning trading room. Hang on here one second. I'm going to get you my monitor. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. For those of you who are new to our trading room this morning, welcome. I'm going to give you a real quick overview of what you're looking at here. This is the diversified trading system. And it's diversified because we're looking at the market from 3 different points of view. Here in the top left, we have the Hawk Scalper, which has been designed to pick up scalping signals. Falcon Swing Trader here on the top right. Eagle Trend Trader bottom left. And the Raptor is the latest addition to the DTS family. It incorporates elements of all 3 of the trading birds, and that's here in the bottom right. The charts you're looking at here are the NASDAQ, and I'm also watching soybeans and crude oil, but I would be happy to take a look at any market which is of interest to you. I'm sure we got a few E-mini traders in the group here. Okay, we're just out of the open, and I'm going to short the NASDAQ here in a second. Now, a lot of times what I do is I won't take a signal right out of the open, but my goodness, the fur is hitting the fan this morning. The market is all over the map. We actually generated the sell signal back here. What you're going to see on these tools is that the signals all tend to develop, and this is very risky on my part, taking the signal this early, by the way. The signals all develop the same way. You're always going to get a triangle and a hash mark once the signal is complete, and you get a warning dot when the signal is just starting to build. Now, what I've done here is I've just enabled my trade manager. Well, this is the Trailblazer version of the trade manager, and it is automatically going to manage my stops on this particular trade. So once we hit the break-even trigger, I'm probably going to go to a different stop strategy, maybe something like, maybe the parabolics. I like parabolics. All right, so now we're in parabolic mode, hopefully about to hit our first profit target. Hooray! And now we've got a runner in play. So let's see whether or not the market will fall off here a little bit and whether parabolics will allow us to take this market a little bit lower. So as I said, what I really wanted to do is I wanted to sell this signal right up here. I got in a little bit late, so I chose to short it below the low. And the reason this was a decent signal was, well, we had a couple things going on with this particular signal. First and foremost, we had what we refer to as a test of the extreme and a failure. So this is the high. The market came up, failed, started heading lower. Oh, the bar style, by the way, that you see here, these are the mean Renko bars. It's a chart style that was specifically developed for the DTS system. However, I do believe that you can purchase it as a standalone also. All right, so we got tagged on that little bit of a pullback, which may prove that I had my stop a little bit too tight, but it was a profitable trade all the same, so nothing wrong with that. And as far as our 20-day challenge goes, I guess we hit the mark there. Yes, we did. So we've made our 20-day challenge is we're trying to see whether for the next 20 days, whether we can be profitable for 20 days. And what's the point of that, you say? Well, besides the obvious, I mean, is that if you can make $50 or $100 per contract per day, I know it doesn't sound like a lot of money, but you can quite literally make as much money as you want, because after that, trading becomes a numbers game. It just becomes a matter of getting enough size in order to really make some serious money. But even trading singles, like we just did here, our trade worked out to $145, which on a single we had a $100 target and the runner picked up another 45. But even with our $100 target there, even on singles, if I do that every single day, that's an extra $20,000 a year. That's just on singles. If I went all in, all out on target, I would have actually had a $200 profit on my 2 contracts, and that would have been $40,000 a year. If I do it with 5 contracts, that's $100,000 a year. So I hope you can see how you don't necessarily have to be running around chasing, trying to capture. I had one fellow wanted me to teach him to be a scalper. He says, I want you to show me how to take 100 signals a day. And I said, you'll never be successful taking 100 signals a day. You don't need to do that. He never came back, by the way. Good morning, Jim. Jim says our advanced decline is about a negative 1,000. So I had a feeling we were going to have a bit of a bearish day today in the stock indices, just the way the market was tailing off yesterday. Now that the dust has settled a little bit, we can take some time here and take a look at the overnight. This is now on the Eagle, our Eagle trend trader. And you can see the London Open right about here. The market left off, actually the Asian session was fairly active. So the market closed more or less around here yesterday. A little bit of a layoff here during the Asian session, and then the European Open, and the market just took a bit of a nosedive there to where we are now. So our North American Open right about here somewhere. And this is going to look like a little bit of an opening gap. However, I don't think we're going to see the market retrace into that. Rather, I think that's going to be more of an acceleration gap today. And let me get you some information here. Some of these tools that you're going to see here today, if you have any questions or you want to get some more information about them, you can follow this link right here. So our trade forecaster saying that we are in trend mode for about an hour. Good news. That means that we can probably expect some decent follow through on some of these signals. Okay, I'll see if I can get into another trade here in a moment. The Falcon producing a nice late filter entry signal. Oh, actually back to back late filter entry signals. These are very high probability signals for the Falcon swing trader. They're easy to identify because the filter goes out of sync, comes back into sync, we generate a signal, but the whole time the trend line does not change color. Very high probability signal. Oh, we're working on another late filter entry signal. I don't like to see them bunching up though. I don't like to see, normally we only see maybe 2 within a trend. Now we're generating 3. That's not necessarily a sign of strength. All right, so after the initial frenzy, they might be settling in a little bit. Okay, we're actually getting here now on our scalping tool, we're getting a green bar sell. Now, these kinds of things tend to develop toward the end of a trend. The green bar sell. It's not to say the market's not going to head lower. In fact, we could set up, the green bar sell is a type of tool or a signal which we can either plan to take the failure, in other words, we're going to set up to buy it, or we can try to short it, or we can just leave it and use it as an early warning that the trend may be changing. Now with the green bar sell that we see here, we haven't had a test of the extreme yet, right? We haven't really seen the market retest the lows. Which we should see before we get any serious rally. The thing about these green bar sells is that they'll very often lead to a first micro macro cross, which is what we're seeing right here. Now the first micro macro cross is a very strong signal, and for those of you unfamiliar with it, it's, as the name suggests, it occurs when the micro line, that's this thin one, crosses the macro line. Everything comes into sync. It's that first signal where everything comes into sync. So you see red bars, red warning dot, red signal, red filter, and there's a very high probability that signal will follow through. Okay, now we're into a red bar buy, which we get at the end of an uptrend. All right, so here we go. First micro macro cross signal. I'm going to take it above the high. We've got a little bit of a test of the extreme there. And again, this is still fairly early. We're still into the first little bit of the opening range. We're only about halfway through our opening range. Perhaps what I should have done is dialed down the risk amount a little bit here, but we'll let it go. We'll see if they give us a little bit of a pop to the upside. So I actually delayed my entry somewhat. The actual signal occurred right here. Let's see if they're going to let me get away with that. Come on, get up there. See, that's the problem with delaying your entry, is I made the market move, let's see, 1, 2, 3, 4, 5. Oh, I made it move a good 5 ticks before giving me my entry. So what's the big deal about that? Well, I'm running a 10-tick target, so I was about halfway to my profit objective. All right, you see this little swing here? This means it's time to start rolling my stop because the buyers are on their last chance to pull this thing off, and I'm going to go to a more aggressive stop strategy here in a moment. I'm going to go with my bar high low, I think. Enable my stops, and you see if we continue higher here, you're going to see Trade Manager start to roll my stops. Otherwise, if they reverse, it's probably as good a place as any to take my hit. And here we're going to give it a little bit of a nudge. There we go. Hit our break-even target. Oh, get up there. They just kissed the profit target. Don't you dare. Ah, stinkers. So unfortunately, by delaying my entry a little bit, I came up just a tad short. So had I taken the signal on target, I would have achieved my profit objective right there. And instead I got tapped at break even. Oh well. Break even +1, so the broker will be happy. But again, it's that first micro macro cross signal, right? There's a lot of follow through on a signal like that. Okay, here on the Eagle Trend Trader now, we're getting a green bar sell. This is also a high probability signal. We're currently against the ATR, so I'm going to let it flip the ATR over. And this bar that's currently forming is going to become our signal bar. This blue and red squiggly line you see here, that's an ATR that we use as a filter. Perhaps the better place to enter is right below this low, but once again, that would mean giving up quite a bit of our profit objective before I even gain entry. All right, the NQ really active this morning, at least compared to how it has been the last few days. Did the buyers all of a sudden dig in? You see we've got a low here, we've got a low here. Looks like 44.54 is going to be a pretty important number for the buyers. All right, the market's moving the other way. That's going to negate our signal, so we'll turn that off. And now we're starting to chop about a little bit. You see here on the hawk, we're starting to generate some yellow bars, and they're all more or less on the same latitude. Our filter is starting to break up. These are signs that the market could be getting in a little bit of a sideways mode. It's not a big deal. Sometimes half the challenge is just recognizing that the market is moving sideways. We'll take a look here again on the Raptor. Give me a chance to show you the Geiger counter. This is the latest tool from Indicator Warehouse, and all these tools that I'm showing you, you can use on any chart. It doesn't have to be a DTS chart. You can use it on your time chart or tick chart or whatever you would like. And the Geiger counter is essentially a tape reader. I'm just watching this unfold here. We're perhaps going to generate a sell signal. There we go again with the Raptor. And I'm going to shoot a trend line across the bottom here. If we breach that trend line, I'm going to hit the sell button. Now, the Geiger counter, as I said, is a little bit of a tape reader. It's showing us the time and sales visually. And it's plotting. You can see what we're looking for is we're looking sometimes for these little islands. That's not the best example. Occasionally you'll see these spikes in the time and sales, and very often that's going to alert you to where a buying trap or a selling trap. All right, we're really wedging up. Okay, sellers, if the sellers knock them down here again, I'm fairly confident we're going to see a break below the lows. Come on, you guys. And I'll get my stop strategy ready. Or maybe I'll give myself a little bit more room. Oh, it's on the wrong side. Okay, we'll stay with the swing to start. All right, so we've generated our triangle hash mark. That tells us that the trade parameters are complete. All right, there we go. Let's see whether or not we get some follow through on this one also. Geiger counter a little bit bullish. You saw the needle was green, and here they go. Look at the sellers piling on now. Okay, so Trade Manager or Trailblazer took my trade, snapped it to break even on the break even target, and maybe we'll go with an ATR stop this time. So what you're going to see is you're going to see the Trade Manager automatically roll my stops. Well, actually, Parabolics will be better for that. You'll see it automatically roll my stops lower according to the stop strategy. And we have 16 different stop strategies to choose from here. Oh, come on, you guys. So the sellers made a huge dive. All right, come on, sellers, where are you? There we go, come on. Come on, take out that low. Somebody get in there, take 45. What are we at? There we go, 49.75. 44.50 is going to be a little bit of a stumbling block, but if we get below 44.50, I think we're going to really see this market start to make some direction to the downside. No, they're flinching. So the whole point of having the stops automated like this, and like I say, you have 16 strategies to choose from, they're all fully customizable, is it gives you the opportunity to look for other trades. And a lot of people are confused about how to best manage their positions. You can see I normally start with something a little bit more conservative, give the market a little bit of wiggle room. I'm using the break-even stop to get my trade to break even as soon as possible, usually when I'm about 3/4 of the way to my profit objective. I'll let the tool automatically roll the trade to break even. Oh, come on. Come on, sellers. So you see this little bit of a spike here? Sometimes it looks a little more like a plateau, but how it's a little bit isolated here, that's a lot of sell orders. Where's that follow through? Come on, sellers. They're loading up. The buyers are absorbing all those sell orders. Come on, sellers. Nope. All right. Well, that's all right. We got stopped on the little bit of a retrace there. And now I can make a note in my trading journal to see whether or not I would have been better off with a more conservative stop strategy, perhaps something like the ATR, if that would have held me in a little longer. But, well, we can't complain. 2 trades. No, so far it looks like we'll see if they take out this high. If they get back here above 44.55, that's where our stops were at. If they get back above here, yeah, there they go. So it looks like it was a good idea to run that parabolic, take my trailing stop early, or even to be all in, all out. Had I been all in, all out on these last 2 trades, we would be sitting at a $400 profit approximately. So the fact that we saw the buyers step in here around 44.50 made me suspect that they were indeed going to run our stop. So good call, Eric. I was able to capture a little extra on that move. All right, while we wait for the next opportunity. Way to go, John. John says he picked up a nice winner on that hard edge bounce off of the Raptor. I'm assuming it was this signal right here. Well done. This one had a couple things going for it. First off, I think we can all agree we have a fairly obvious trend here this morning. So any signal to the upside, we need to be a little bit suspect. Furthermore, this was starting to get the shape of a bear flag, wasn't it? Now, for those of you unfamiliar with the terminology, a bear flag occurs in a downtrend and it's essentially just a little bit of a pullback phase. See this little bit here? That's called a bear flag. And it's called a bear flag because it normally breaks to the downside. Here's another one. It normally breaks to the downside. But if you take a bigger view of this whole thing, this whole retracement here was like a great big bear flag. The market comes out of here, and then we generate our sell signal telling us that all the trade parameters are there, and down she goes. So a fairly predictable signal here on the Raptor this morning. We would have had a comparable signal, I believe, on the Falcon. Let's take a look at the Falcon here for a second. So here on the Falcon, we've got an opportunity. Okay, we've got actually a nice... We've got a nice opportunity here off of the primary support. Now, these lines that you see here, this is the ultimate support and resistance suite. Again, this is an add-on indicator. You can find out information about that at the link that I sent you earlier. But what we're looking at here is the primary resistance. And you can see that the market gave us a trend change signal. That happens when the trend line goes from green to red. Everything comes into sync. Our filter is red, our bars are red, our trend line is red, our signal is red. We have this characteristic down, up, down pattern. We generate the signal bouncing off of the primary support. Down she goes. We normally expect it to reach this area down here. This is why I was saying if we get below 44.50, we got a little bit of room to move. I thought for sure we were going to see 44.45, but it hasn't happened just yet. The market flinched a little bit early. All right, so let's take a look while we're waiting for the next signal. Let's take a look here at crude oil. I'm just checking the comments. Oh, Mark, well done. Mark says, good morning, Eric. Another 2 profitable trades on the NASDAQ Eagle for $400 each. Well done, Mark. Knocking it out of the park. Mark says, I'm done again, and I've only been working for 21 minutes. Yeah, that's the kind of work day I like too. Fantastic, Mark. All right, here's crude oil, and crude oil says, at least according to the trade forecaster, this is crude oil on our Eagle now, that we're in trend mode for about 30 minutes, 34 minutes, after which we're going to be moving into swing mode. And all that means is that during trend mode, we normally anticipate not necessarily that the market is going to make a huge move like this, although very often it does, but rather that the pullbacks are going to be minimal, right? The market is going to be fairly calm. It's going to have better follow through. It's not going to be, wild and crazy like it is around here. I can almost guarantee you that during this period here, the market was in scalp mode. But currently we're in trend mode, and the market's trying to head a little bit higher. What I find interesting is it's crude inventory today, and the market is wedging up nicely. A lot of times when we get the crude market trapped in a trading range, I'll take a look at bracketing this range and trading the breakout during the inventory report. So we'll see how that holds, and we'll come back to that a little bit closer to inventory time. And the other market I'm watching is soybeans, and we're just about to generate a trend change signal on soybeans here. You can see we've got our warning dot. We don't have the triangle and hash mark yet, so all the trade parameters have not been met. The nice thing about soybeans, however, is that they do tend to stick to a direction. Once they pick their direction, they tend to go with it. So I'll be waiting for that to develop. Here on the hawk, on the scalper, we're also working on a first micro macro cross signal here with soybeans. And this is a signal that we could already set up for. So it does look like soybeans, well, they're waffling a little bit. Oh, they did come down the last few days. This could be a little bit of profit taking going on, perhaps a little bit of a retracement of sorts. The red bar buy signal was our first micro macro cross was right down here. And once again, it occurred after we had the test of the extreme, right? That's why these things are so important. You get the test of the extreme, a first micro macro cross. Here's a signal you can take with a great deal of confidence. After that, we get our macro pullback signal. That's this guy right here. It occurs when the price comes into the macro line, the trend line changes color. We got a 4-arrow consolidation and a red bar buy, all occurring at more or less the same level. Oh, and another macro pullback right there. So we had lots of opportunities to get in just around the open. And here's yet another chance off of yet another first micro macro cross signal. So we'll keep an eye on that one too. See how that plays out. Well, there's been a lot of effort to push the market lower, and not a whole lot of follow through, really. You know, if you take a look here. So where did we open? We opened right about here. The initial decline was great. The second decline had less momentum to it. We're generating another green bar sell, which is a strong signal. We're still against the ATR filters, so thank goodness we haven't had to make a decision about this one just yet. I'm not liking this lack of momentum to the downside, not one bit. Jim's giving me a bird's eye view of everything. He says the NQ didn't make a new low of the day, but all the rest did. I guess there was 1,000 new job openings posted. Was there what report was due out today that I missed? Oh, I know, I'm terrible for following reports. Was there a jobs report out today? Yes, so the JOLTS job opening. Oh, yes, of course. Sorry, forgot all about that. Yeah, I know you guys are all writing the jolts. I was thinking, oh, it jolted the market. Yeah, sorry. Sorry, it's early here on the West Coast. Oh, dear. Well, it looks like they're kind of content to be going sideways here at the moment. So we'll just let them sort themselves out. Our soybean trade has now moved into yellow bars, so that's going to nix the signal. We don't like yellow bars. Yellow bars are too indecisive. So I'll shoot a trend line across here just for giggles. And we'll see where they tend to find some support, if they're going to find some support. Notice our hawk here on the NQ, still a lot of yellow bars cropping up here. Not as much follow through as we would like to see on some of these signals. Here's another first micro macro cross. Here's a red bar buy. We're not getting that follow through. And even to the downside, well, this first micro macro cross was okay. This macro pullback did not have enough follow through to it. Now, depending where you put your stop, you could still be sweating this trade, but you don't want to be stuck in a market that's lost its momentum. So we'll try to be careful about picking our next signal. And we've got to hold out for about another 20 minutes or so before we get the crude inventories report. It's important not to chase the market around if you can help it. You know, there's going to be times like this where the market's just, you know, sorting things out, trying to get a handle on it. We are getting a first micro macro cross signal here in our hawk. We're still within this trading range, so this is a little bit of a higher risk scenario. Maybe what I'll do is I'll dial down my risk amount. There we go. We'll risk 1% on the trade. And we'll go in with a runner. No, did that wrong. Let's do it like this. If it pops to the upside, then we'll see where it goes. But so first micro macro cross, like I say, high probability signal, but you know, this first micro macro cross, well, it made its high probability target, but just barely. And now the signal is retreating a little bit. Oh, and now we're into yellow bars, so I don't even need to worry about it. And another red bar buy signal. All right, well, here we'll tee up for the red bar buy just so we have something to watch. So the red bar buy signal tends to occur at the end of an uptrend. That's why very often what we'll do is we'll take the failure of these signals. That was also an option. This one was falling more or less along the trend line. So looking for a little bit of buying support, maybe from the buyers. Maybe another test of the extreme, although you could make a case that this here was the test of the extreme and that now the market will head lower. Yeah, there they go. They're going to tail off. Come on, buyers. Where are you? See, that's the problem with some of these weaker signals. That's why I say we don't necessarily chase signals around. What we do is we tend to concentrate on the higher probability signals. And you say, well, which ones are those? We've got what we call our cheat sheet, and it's going to highlight our signals for us. So this is the cheat sheet for the hawk. And you can see first micro macro cross, strongest hawk signal, right? This is the one, if you're just looking for strong signals, that's the one. macro line pullback signal, 4-arrow consolidations, post 4-arrow consolidation, which coincidentally is also a macro pullback. And then here the red bar buy, or its bearish counterpart, the green bar sell, prelude to a reversal. And that's exactly what we saw here a moment ago. But that's one of the luxuries of being a trade room moderator, is I get to show you these kinds of things. Mark is asking, are we seeing a rule of 3 setup in the Eagle? Okay, good eye, Mark, maybe. So a rule of 3 occurs when we start printing signals against the band. Now this band gives us our directional bias. So the soft edge, that's this side here, is below the hard edge. That's this side here. And we've printed 3 signals against a bearish band. The rule of 3 says that we normally buy that third signal. However, a rule of 3 must always be preceded by a test of the extreme. So I think that's what we're seeing right now. So this may actually develop into a rule of 4. See, this one up here was only a rule of 2, but we did have that test of the extreme. There's the test of the extreme, there's the failure. We only managed to print 2 signals against the band, but the concept remains the same. So we need to see the buyers step up now, and if they don't, then that's going to negate this whole rule of 3 business. All right, well, they're taking their time there. We're back down here to the lows of the day, or the lows of the morning. This whole 44.50 area, we know that they're quite sensitive about. Sure, somebody is going to be curious about the E-mini. Nobody's asked me for the E-mini yet, but I'll load it up. We'll take a look at the E-mini here in a moment. And in a few minutes' time, we'll queue up an order for the crude oil inventory. All right, so here's the E-mini now on the Hawk scalper. And you can see we had a nice first micro-macro cross signal here at the top of the hour. Very good follow through on that. 4-arrow consolidation right here. Good follow through on that. That was shortly after the market opened. So the E-mini plodding along very nicely. That was on the Hawk. This is the Falcon Swing Trader. Oh, a nice late filter entry signal. You see, these are almost as good as money in the bank. When you see a late filter entry signal like this develop, so that once again, trend line does not change color, filter goes out of sync, comes back into sync, and you generate your signal. Very, very strong signal. Yeah, just would have hit our profit objective there. That would have been a very nice little trade. And last but not least, the Eagle Trend Trader. And we had, well, our first with trend signal right here, again, shortly after the market opened. We had another chance here off the soft edge bounce. All these signals in sync with the ATR, which is always nice to see. And, well, 2/3 of the way to that profit target. So a good day in the E-mini also. All right. Nicely done. Mark posting a 4-figure day. He says, I just took that last signal on the Eagle for another $400. Now I'm done. Don't want to push my luck. No, you went 3 for 3, Mark. Fantastic. That's a good quota to have. And a 4-figure day is always nice. So the signal Mark is referring to was this green bar cell that was building. So we had the green bar cell. I don't know if he waited for the ATR to turn over, but if he did, this then becomes your signal bar. You've got a great spot to cover the trade. Oh, I guess Mark took the signal on the hash mark because it's just hovering above my signal otherwise. And there you go. Good job. All right, well, it does appear as though the NQ is set on heading lower today, so we're going to continue to look for shorting opportunities. In the meantime, let's take a look here at crude oil. This is crude oil now on our Falcon swing trader. And you can see that we are still range bound and pretty much trading in the middle of this trading range. Look at our trend line. It looks a lot like a roller coaster. So the nice thing about this is that since we have a fairly well-defined range, we can bracket this range with our OCO order and perhaps sell below and buy above. I'm going to go with a very conservative stop to start, just because, well, crude oil is a pretty crazy market, or it can be. And while we're waiting for the inventory report, here's soybeans on the Falcon swing trader, and we're generating a trend change signal. We're against the primary resistance here, so we're looking for it to break the primary resistance to generate our sell signal, or to validate our sell signal. So we've got the warning dot. You can't see it very well because it's blocked out by that hash mark. We have the triangle and the hash mark telling us all the trade parameters are met. We have one of our high probability setups. And if we violate the primary resistance, we should see the market retrace back here to the median line This is on our support and resistance suite. So we'll come back to that. All right, about another 10 minutes for crude to do its thing. It's funny here on the Eagle. This is Eagle on crude oil. Speaking of that rule of three, we are generating a rule of three signal here on the Eagle. Now, what amazes me is very often the DTS tools, we will pick up the market bias before the report even comes out. So what I'm saying is that the Eagle right now is flashing me a sell signal even before the report is out. So if you wanted, you could set up to take your trade one-sided. And like I said, being a trade room moderator, I do have certain perks. Ooh. Now, did you notice that? This is the Trade Manager tool I'm using. The other one you saw in the Raptor was the Trailblazer. The Trade Manager has this risk component built in. It will not allow me to risk more than I can afford to lose. So I currently have risk limited to 2% of my trading capital. Oh, I can just squeak an order in right there. But if I try to go to place a little bit more money at risk, it says, no, sorry, Eric, you can't afford it. Can't do it. So that's probably the maximum I could do. All right, so just for curiosity's sake, I'm going to leave that order in, and we'll see whether or not the Eagle actually forecast which way this trade was going to go. And we'll go back here to the Falcon as we get closer to the inventory report, and we'll see the action. I'm going to throw the Geiger counter on here too, because it's kind of fun to watch the Geiger counter unfold. Where are you, Geiger counter? There you are. All right, this thing, well, crude oil, pretty quiet. It's hard to believe that it may actually go below 43.50 a barrel. It's been hovering around this whole 43.50 area for a while now. But once the inventory report hits, I think you're going to see this Geiger counter go ballistic. The other thing, the other way to trade the inventory report, I've mentioned this to you guys before, a trading friend of mine, he likes to let the report hit the floor, get that initial bounce out of the way, because a lot of times crude oil will give you a fake move out of the inventory report. So he'll let the first minute pass, then he will bracket the range and see which way the market is going. Okay, Andy wrote a big question here, which I'll get to in just a moment, just after the inventory, because we're only a few minutes out from that. Tony is asking, good morning, Eric, regarding crude oil on the Falcon, is your profit target $200? On the Falcon, our profit objective is normally $100 per contract. So in crude oil, that would be 10 ticks, because crude oil trades at $10 per tick. However, because of the volatility in crude oil, I double the profit objective. I do the same for gold. The Russell, when I used to trade it, the mid cap. There's a few markets that I tend to double the profit targets on. Soybeans, I tend to double the profit targets just because soybeans really tends to have big follow through. Like I say, once they settle on a direction, it's not too difficult to find the first profit objective in soybeans. For instance, here's our soybean trade on the Falcon that we just entered on that short. And you can see that, well, we already would have hit our high probability target. The bottom of this particular candle was $100. But I really stretched the soybean target. I'm actually looking for it to retrace down here to the median line somewhere. So you see $75, one more tick, we would have our, there it is. So that's $50 per contract. Sorry, my mistake. So we need to go a little bit further in soybeans to get our $100 target. My point is, it's for some of these markets, it's okay to expand your profit objective if you choose. But the high probability target, always a good way to go. You will very rarely be disappointed with your high probability targets in crude oil. That means $50 for the hawk, and we know crude oil will go 5 ticks in a heartbeat. 10 ticks in the Falcon and 20 ticks on the Eagle. Way to go, John. John says picked up a classic Ricardo hard edge bounce for 20 ticks. Was that on the NASDAQ? I don't want to move away from this chart because I know the inventory has got to be coming out soon. Yeah, that was on the NQ. Oh, well done. So that was this hard edge bounce right here, shorted the signal. Well done. Great follow through on that. Good job, John. All right, here's crude oil. The calm before the storm. Look at how neutral the needle is here on the Geiger counter. The market is so evenly balanced. Okay, we'll see what they do here in a moment. Okay, we're only a couple of minutes out. It'll be pretty obvious when the inventory report hits because the market's going to go nuts. I have my stop enabled. Yes, only thing about using the OCO orders is I do not get a preset profit target. So I could either preset profit targets. We can always do that, right? We can preset a profit target up here and perhaps preset a profit target down here using our support and resistance lines. There we go. All right, there's the inventory. Oh, still stuck on that 43.50 line. All right, getting a little bit of a plateau here. Notice this spike here on the buy side. We just absorbed a whole lot of buying. All right, a quick little trend change signal here, early trend change signal on the Falcon, but the market's still stuck. All right, here come the sellers. Let's see, are the sellers going to plateau now? Just absorbed a whole lot of sellers as well. Not quite as dramatic as what we saw in the on the buy side, but still. Yeah, like Josh says, let's see any fireworks at 10:30. Yeah, no fireworks. Tony's right. 2 weeks in a row, unspectacular for crude oil. That's a good way to put it. The market very reluctant to move out of this 43.50 zone. So what my trading friend would be doing now is he would probably, well, actually our parameters are set pretty well, but since the report has already hit the floor now, it's had a chance to absorb some of the information, he might consider tightening his buy order above these highs here. I don't mind leaving mine on the other side of the resistance line. We're working now a proper trend change signal where we get the down, here's the up, working on the down, don't have the signal just yet, so still only have the warning dots. Here on the hawk, also working a 3-arrow consolidation on crude, so you could set up to short it like so. So a couple opportunities here in crude oil, everything looking a little bit bearish at the moment. Yeah, not much going on with crude oil. Here's our soybean trade progressing nicely. So off of that trend change signal, we're about 2/3 of the way to our profit target here. Also, again, I'm expecting it to trace down to this median line on our support and resistance suite. So keep an eye on that. And I'm getting bored with crude here, so it's non-committal. I'm going to cancel those orders. It's too well balanced at the moment, so I'm not going to play with it. Not if they're going to be like that. All right, so, oh well. Not quite as dramatic as I had hoped. Okay, so that gives me a chance to answer Andy's question. Andy writes, Eric, I have the trade manager. Fantastic strategy, lost without it. This is a rather long question. In regards to the trailing stop, I enter a trade with the ATR trailing stop, tick the stop, goes just above my entry because I normally enter at the ATR if it's at resistance or support. So I normally enter the trade with the ATR trailing stop unticked, then tick it once I'm in. However, if that doesn't trail anymore, am I doing something wrong? Oh, however, after that it doesn't trail anymore, am I doing something wrong? Okay, so if I understand Andy's question correctly, he likes to use the ATR stop strategy, and he will disable it to start. And here, we're just going to throw an order in here. And now what Andy does is we're going to cancel this so we get a chance to play. So now once the trade is active, he turns on his ATR strategy, but he says it's not trailing. You need to make sure that this trail enabled indicator is checked. Then click accept, and it should enable your strategy. If you want your strategy to hold, or if you want to move it manually, you can disable it and then you can drag it wherever you want. So that's probably what's going on. You have to have it enabled in order for it to become active. So if I click accept now, it will go to the ATR strategy. If I decide to make it a little bit wider, I can change the parameters, click accept, and it will snap to wherever I want it to be. Now, if I've hit the break-even trigger, however, all that is void. Oh, speaking of break-even triggers, here was our crude oil trade on the Eagle, which I almost forgot all about. We shorted it, and we've since hit our break-even trigger. Remember how I told you the Eagle or the DTS tools will very often find the direction even before the report, and that's exactly where we're at here with our Eagle trade on crude, pushing about 240, 250 in profit. So we've hit our high probability profit target on crude oil, but it's kind of stretching the profit target there a bit. See if we can sneak a little bit more out of it, so we'll come back to that. All right, so I hope that answers your question, Andy. That's probably what it is the trail indicator enabled tab is not clicked on. And then once you do turn it on, remember to hit your accept button. Floyd is asking, what settings do you use for the NASDAQ cloud indicator? Are you referring to the Eagle cloud or the Raptor cloud, Floyd? And good news, Tony says using the back tester, that's the profit finder, he says I had good results using only the support and resistance suite. It was a fun exercise. Yeah, I know. Modesty aside, I'm quite proud of the support and resistance suite. It took a very long time to figure out the math behind that, but the numbers perform very well. I'm quite pleased with them. We've gotten a lot of compliments. Okay, on the Eagle, Floyd says, well, there's not much adjustment with the cloud itself. It's already preset. I don't think I can even change the cloud on the Eagle. No, I can't. No, it's already preset, Floyd. The Raptor allows me to change the cloud size a little bit, but the Eagle, it's all preset. The Raptor, I've been working with an 8-tick cloud at the moment, and that's mostly due to Ricardo's research here on the Raptor. And Ricardo's actually running a double cloud. an 8 tick and a 10 tick, so I might be incorporating that also. I'm really liking the results that he's getting off of those. All right. All right, just looking for something to shake loose here. Not much going on at the moment, still a lot of sideways action. The NQ's kind of been going in spurts. Down, I do believe, is the direction of choice. But momentum does seem to be waning. If we take a look here at the Eagle. Oh, although that third leg was fairly strong, wasn't it? I was going to say the legs are getting a little bit shorter, but I think I was a little premature on that comment. I'll shoot a trend line across the tops. Oh, just looking at this, perhaps getting a green bar sell, which, you know how I was telling you how the red bar buy, green bar sell, not a strong signal on the Hawk? They are a strong signal on the Eagle. So you can see a green bar sell there. Mark capitalized on that move. Nicely done. Green bar sell here. Also enough follow through for our high probability target. And now we're just kind of squashed. Here's the Raptor. Producing a little bit of a sell signal here. We're making lower highs. That's encouraging, but at the same time, we're kind of making higher lows. Nothing I want to get too excited about. Yeah, like John says, chop. Chop, chop, chop. And don't be surprised to see a reaction here to these lows. But it's good that we're below 44.50. That's significant because that was really holding the buyers up for a while. comes the Raptor again. Now, you know, I've already made my quota on the day, so we're just kind of coasting now to the top of the hour. If we see a swing here, this could be significant because that would be our test of the extreme coming down. All right, so here is our retest of the lows. If this market rallies now and we produce a buy signal, that could carry some strength with it. All right, well, let's put that back up on the shelf for now. Don't want to get too excited. Well, here's that buy signal. You know what? We're here in the room. Why not? We'll throw in a buy order. I'm going to enable my stop. Let's go below the swing. No, that's not where I want it. Here, let's use that one. I was just telling you, if we get a buy order here, we're going to see a little bit of a run up based on this higher swing low, the test of the extreme, the fact that the market might be trying to recapture this 44.50 line. This is a little bit on the risky side, of course, because we know 44.50, a pretty sensitive number. Fully expect the sellers to step up here, but you never know. We might be able to push a little bit higher. Gives us a little something to watch anyway in the meantime, as there's not any real opportunities present at the moment. A hop above 44.50 here would be significant. There we go. It'll give me adequate staying power. If it fails at this point, well, then it's probably time to pack up my toys and go. Ho-hum. Oh, wow, the advanced decline still very lopsided. Jim says about 700 buyers, 2,200 sellers, so that puts us at about a negative 1,500. So don't expect too much on the buy side here, is what he's saying. We still have a lot of sellers in this marketplace. All right, well, I'm going to throw that back up on the shelf. You can see a lot of choppy signals again here on our hawk, a lot of yellow bars. Actually, we're working a first micro macro cross lower here on the hawk, but I'm starting to think that we've seen the move of the day. You know, the NASDAQ recently has been making a rather pronounced move out of the open. Today it was extended a little longer, extended into that first hour of trading, but after that, it tends to go sideways, like yesterday and the day before and the day before that and the day before that. The market just flattens right out and doesn't really go anywhere for the rest of the session. Now that may or may not be true today, we'll see. But right now, it's not looking like we've got all that much going on. I wouldn't mind seeing a little bit of a pullback through here. That would definitely offer us a few more trading opportunities. All right, you guys, if anybody has any questions, please type away. Let me know if I've missed a question. I'll just scroll back through the chat window, make sure I haven't forgotten anyone. Otherwise, I think we might button up the room, call it a day. If you are trading this afternoon, the stock indices definitely weak. Okay, a couple questions. Arlen is asking, can you show the Raptor on BRN? Let me see if I can get that. Oh, on Brent crude. Okay, hold on a second here. Is August? No, October. I'm getting October as the front month for Brent crude. Let me see if I can get that on my data feed. Yeah, I knew there was a reason I wasn't following it. I'm sorry, Arlen, I'm not getting Brent crude on my data assortment. I've only got West Texas, the CL contract, in my assortment. I don't know why they wouldn't give me that. That's a pretty common market. Yeah, Arlen says West Texas crude is very slow moving compared to the others, especially of late. Yes, that is so true. Normally crude, a much more active one, but not recently. I apologize. I would be happy to show it to you if I had it available. John is asking, can you discuss the use of higher highs, higher lows, lower lows indicated for market structure? Okay, so what John is referring to, and I suppose we can look at it here on the Falcon. One thing I like about the mean Renko bars versus, say, a time-based bar is it makes it very easy to see who is in control of the marketplace simply by following the latest swing points. The swings will tell you whether the buyers are getting stronger or whether the sellers are getting stronger. You always need to temper this information with the whole trend, however. So as a for instance, I'm probably going to get somebody writing me later today saying, Eric, this was a trend change signal in the Falcon. How come it didn't work out? This signal right here. Why did that fail? Why didn't that work out? Well, it didn't work out, and they're going to say, well, it bounced off the secondary support and everything. It should have went higher. You have to maintain the overall context of the chart. Looking at this chart, if you put this chart in front of an 8-year-old and you ask him, is it going up, down, or sideways? He would probably say it's going down because it's starting up here and going down here. Or at the very least, he would say it's going sideways, but it's certainly not going up. Therefore, any buy signal is going to be very much a counter trend signal and very much a higher risk opportunity. That's not to say you can't take the signal, but you should perhaps do things to protect yourself, dial down your risk amount, perhaps run a deeper stop, and so on. Perhaps wait for a second push on the entry. A second push entry merely means that we allow the signal to engage before we place our trade. So in this case, the signal actually never really engaged, so it was a non-issue. But if we scroll this ahead and we see how the market is making swings, we can say that, and all the time we're looking for these tests of the extreme because those are the dead giveaways that the market might be changing direction. So currently the extreme price is right here. This is the low. We're looking for the sellers to make an effort to recover the trend. How do I know that? Well, look at what the sellers have done in the past, right? They rolled the market down from way up here all the way down to where we're at right now. They are not going to walk away from this market simply because the buyers forced a little bit of a rally. So I want to see a real effort on the part of the sellers to recover the trend. And it looks like the effort may be coming right here. After this, the buyers start to take control of the market. And now I'm starting to become a little bit more bullish. Why? Well, because the sellers were unable to hold the market for the time being. All right, now I spoke too soon because here the sellers are knocking the market down again. All this time, we're not really generating a signal. You see, we have no confluence here. Our trend lines are flip-flopping, our filter is flip-flopping, but the market structure is saying, okay, now the sellers have control, and the sellers still have control because now we've made a new low. Oh, and now we get, oops, I guess we had an early trend change signal there. Now we get a proper trend change signal, so that it gives us an opportunity to short. And did that reach our high probability profit target? Yes, it did. Just hit our high probability target, the market turns on its heels and now starts going the other direction. But at the moment, the sellers still have control of the market. So what you want to do is you always want to weigh the overall trend with what's going on your chart. When the market bottomed out here, it was starting to look very bullish. Had the buyers managed to push the market to a new swing high or even to the old swing high, this would have made the market very bullish, and we could have anticipated another swing to occur, something like this, at which time the Falcon would have printed a buy signal. And we could have bought that with some confidence because now we have seen the sellers lose control of the market and the buyers gain control of the market. All right, so I hope that makes some sense for you. Arlen's asking, is there a way to schedule time with you outside the room? Yeah, absolutely, Arlen. You can email me at eric@supportandresistance.com, and I'm going to send everybody this information. Or better yet, if you're looking to discuss perhaps picking up some of the tools, you can talk directly with Adam at indicatorwarehouse.com, and I'll send you his email also. This price structure, by the way, occurs time and again. Right? This is nothing new. It occurs every time. If you want to get good at it, just scroll back to where the market changes direction. and see if you can spot why it changed direction. Okay, well, here are a couple of things that should be jumping out at you. First and foremost, we had a test of the extreme and a failure. Secondly, we had a breach of a previous swing low. Or if you don't consider this one strong enough, we at least had a challenge of that swing low. The market comes out of this, it generates a sell signal, right? A trend change, the down, the up, only a single bar up, comes back, warning dots, triangle hash mark, we have a sell signal. And then the market heads lower from there. Same thing if we go back here to where it changed direction the other way. Why did it change? Oh, well, the first tip-off was the test of the extreme. Right, there's the low. Sellers tried to recover the trend. They failed. It has no choice but to go the other way. And once again, this is in the face of a very strong downtrend. This was the best the sellers could do to maintain control of the marketplace. Oh, did the Falcon not give us a signal? Oh, that's why it was in the wee hours. We did get the early trend change signal. Good news is the Hawk and or the Eagle would have given us a proper trend or a proper signal through here, so we would not have necessarily been shut out. But that's why this market rallied, because all of a sudden the sellers lost their grip on the market. This happens all the time. You know, here was another trend change. Here was a tiny test of the extreme, or you could have seen it as a larger test of the extreme, or even a larger test of the extreme. So we had many opportunities telling us that this was a good opportunity to short. This is rare, where the market reverses with no test of the extreme. This is extremely rare. And it looks like from the way it unfolded here, this all came about in a matter of a few seconds. So had it had time, you see this little candle right here with this tiny, tiny wick? That was probably the market trying to make a test of the extreme, and it never materialized. And I'm just doing this on the Falcon. You can do it on any of the tools. You can do it on the Eagle or the Hawk. In fact, it's good practice to roll through your chart and just spot these tests of the extreme. They're really quite easy to see once you know what to look for. And like I say, they will occur every time or almost every time the market reverses. Here's another one. This makes for a beautiful early trend change signal. You don't even need to wait for the proper trend change signal. If you get structure like this, where the buyers are obviously losing their grip on the market and the sellers are forcing them back, and you produce a sell signal, go for it. Here's a little test of the extreme to the downside and an early trend change signal higher. So a couple of great opportunities within the span of about 15-20 minutes. Michael's asking, Eric, all the terms that you use over are all the use you sorry, all the terms you use are over my head. Where can I read about them? Probably nowhere, Michael, because these are terms that I've used. I don't know if anybody else uses these terms. I think I've originated some of them. I don't know, some of them I might have picked up in my travels along the way. Something like a test of the extreme is very simple, though. It's the basis for a lot of reversal patterns, like a head and shoulders, This is a head and shoulders pattern. This here is your test of the extreme, right? Here's your extreme price, your high. This here is your test and your failure. If we do it the other way, this is your head and shoulders bottom. There's your test and your failure right here. So here's your extreme price, your low, and there's your failure right here. You could also be a DTS owner, and then you can join us in the trading room every morning, and you'll hear me go over these time and again until you hear them in your sleep, I'm sure. Yeah, these are dead giveaways that as to what the market might be doing. And they're also, I've shown them here in the head and shoulders formation, but here's the shortened version. A lot of people, will call these M's or W's for obvious reasons. They're also referred to as 1, 2, 3 tops or 1, 2, 3 bottoms. ABC corrections. You know, they're called by a whole slew of different names. I just call it a test of the extreme because that's what it's showing you. It's showing you what the extreme price is and the market's reaction to it. Oh, fantastic. Michael's a Raptor owner. Yes, if any of this stuff ever confuses you, please ask in the trading room. I'd be happy to go over it with you. So we finally broke that 44.50 area. Looks like we had the right idea. Was maybe a little bit too tight with my stop. I should have ran. Oh no, I would have got tagged down here too. Stinkers. I was going to say I should have ran a deeper stop because I ran my stop initially below there. So had the right idea, a little bit too early on it. But the Raptor coming back with a buy signal now here. And once again, you can have a little bit of confidence in that signal because we had a itty bitty test of the extreme right here. And the market now pressing the sellers. I don't think we're going to see a huge rally to the upside. Might be a little bit of profit taking going on. Oh yeah, different Michael says, I forget about the YouTube channel. We have a YouTube channel. It has a lot of videos. So if you go to YouTube and you search under the channel's indicator warehouse, you will find a lot of videos from past trading sessions down to lessons on specific tools and so on. All right, you guys, I think unless anybody has any other questions, we're going to button things up here. No questions? All right, if you're trading this afternoon, I think we're going to see a little bit of a hiccup here. It looks like to the upside going into the lunch hour. Otherwise, I would remain bearish for most of the day, I think. I think it is going to be a seller's market. Crude oil still trying to head lower. They had a little bit of a move to the upside, but nothing too terribly serious. And soybeans also still heading lower if you happen to be in the soybean market. All right, you guys, have yourselves a wonderful day. DTS and RTS owners, I will see you in the trading room tomorrow morning. We will talk to you then. Bye for now.